Hey guys, Mike here with RPQ. It's Friday the 13th in May of 2022. And yeah, I've got good news and bad news for you guys. So let's start with the, well, somewhat bad news, but also good news in a way. So let's start with the good news, which might have some bad news following. Let me explain. So what we're looking at here is some on-chain data. Again, it's one of our data feeds that we follow, and here in this particular case we're looking at total transfer volume to exchanges. And let me just turn the notifications off 1 second. Somebody always wants something. And here we go. So basically total transfer volume to exchanges, and what that means is basically amount of coins transferred to exchange addresses. I mean, if you're holding, let's say, some Bitcoin or some Ethereum on your Trezor or on a paper wallet, or you've got it engraved, on some plates, who knows, right? But, you have basically, effectively created friction, because if you create friction, if there's effort, if there's activity required, a series of events required for you to take particular action, right? To, in this case, sell your Bitcoin, then that friction will make you think about it, right? It's an effort. It's not like, okay, quick, log in, sell, boom, I'm done. When I'm panicking or something. You have time to think, you have time to breathe, time to kind of, collect your thoughts, because effort is required. So when we see these spikes here, effectively, it's not surprising that we usually see them right here, right? When things go really vertical, to the wrong side, obviously, right? And we saw it a few times in history, but specifically, there was a huge one here, huge, and that was one. Let me guess. You can guess, right? March of 2020, right, when things really when things got really heated with the COVID crisis. And next time it happened was actually in May, right, when things really turned to the dark side again. Here, see that? There's a big spike, and lo and behold, and let me zoom in a little bit. We see it again. And oh yeah, this is actually pretty good here. Let me zoom out just a tiny bit to give you a little bit more context. So okay, so we have all three that are just highlighted, right? And what we're basically looking at is a flush out, right? A lot of people are like, okay, this is it. I'm done with crypto. I'm getting rid of it. I'm selling. Maybe I buy it. Buy it back at the bottom. And what I'm seeing here is that, for instance, in this case, this actually, the big flush out here happened fairly near the lows, and that was in April. Actually, wait a minute. That is in March, yeah. March 13 was the peak of 2020. And then the lows were in fairly quickly. So, okay. So assumption could be made, okay, maybe this is the worst of it. However, it's not always the case. Here we see a spike that's actually more in line with the spike we just saw, or at least where we are at the current time. We might not be done yet, so let's not jump to conclusions. And when we're looking at this, well, we saw the spike, but then we see a follow-up, see? There was this big spike, and then whoever hadn't sold was kind of hoping for a bounce, and it kind of just fizzled along here. And then this data really doesn't provide us much context anymore. But the conclusion I'm drawing from this is that the possibility is that, okay, most likely we're gonna see a bounce at some point. Unless we're seeing more selling activity very quickly that drives us even higher and people panic. Most likely what we're gonna see is a bounce. And then basically either the bounce metamorphoses into or transforms itself into a natural rally, or at least a retest of previous resistance levels, followed by some sideways, and followed by potentially by a scare action, and then hopefully we go back up. But it's basically it's a double-edged sword. This is good in a way because it shows us that the worst most likely is behind us in terms of the selling activity. Right? We have reached a little bit selling exhaustion. Pardon me. And, we might see some follow-up here. It's possible over the weeks to come. It really depends on the market phase. We saw it last year. So it's not unreasonable to assume we're going to see the same. The argument against it is that we've seen already a lot of selling action before. But, no market is the same. no bear market or no bearish phase, whatever you want to call it, is the same. And so, that's it basically. We'll have to see where this leads, but basically that's the one thing I want to show you. All right, so let's take a look at our ninja charts, right? At our indicator. Okay, so right there. Okay, so we look at the daily. Oh, sorry, I actually don't have my chart in the right place. Let me move it real quick. Okay, it's on a VPS, so it takes a little bit longer, but I have the proper size. Awesome. All right, so again, right here, there. Look at that. So we have a buy level as I predicted, and it's at 32,645. So we see this bounce and it's very positive. But just to be clear, we need to overcome this, and then we need to overcome this, and then we need to overcome this. There's a massive amount of support ahead, resistance ahead. And this resistance, well, previous support that now it's basically, no, it's actually was never previous support. It's just price activity that now has created resistance, and at some point it might actually turn into support. But yeah, that's based on the daily, and we need to breach this for this to get anywhere. This is fairly normal to see this bounce, so this is not necessarily bullish, right? I mean, the best we can hope for is something like this. This big wipeout right here. Let me move over here, right? So I'm looking out right there, right? So if you're looking at this right here, it bounced back, paints this candle, a little bit follow up like we have right now. It's a bit stronger here, and then probably screws around a little bit and then gets punched higher. That's the most positive scenario. There are more realistic scenarios. It gets punched up to here, maybe fails, comes back down, maybe does a retest, and then comes back up. That's just more semi-bullish scenario. The bearish scenario is that it comes back up. Actually, it's good that it's going fairly slow. Normally, a really quick snapback means that it's probably going to go down. So this leaves the door open that it kind of works its way up and kind of gets a comfort level, because these quick snapbacks a lot of times gets sold back off. All right, so that's that. Let's take a look real quick at the hourly. Not hourly, 120 we'll usually look at, right? We could look at the hourly as well, but 1 second. 120 minute, I think I prefer that view. So on that one, it looks a bit more positive. We need more data though. 1 second. I always wonder why that never does it automatically in NinjaTrader. I mean, you can actually, till the cows come home, I can probably set it to a preset. Let me check actually here. So normally with 120, I like 30 days. Let me just go back in here. A little NinjaTrader tutorial. And then you go into preset, and I think you can actually make it a save. And preset minute, save. No, whatever. I don't know. It's supposed to allow you to create a default setting for that, but whatever. Moving on. So as you can see, it got refused right here on the 120. It got refused here, got pushed back down, and then breached right here. And that was like about half a day ago. And the net line buy level, let me move over here, 29,490 something. Can read it. It's been covered by this candle here. So we have a buy signal here right now, and the Calmans, right? See how the Calmans have turned, and that's actually very positive. So because these Calmans have held up fairly well, right? And there was some brief convergence, and then I think it was a crossover. Let's zoom in with it. Let's take a look at this. We have the technology, theoretically. So, all right, here we go. So, see as I zoom in here. Let's look at a little bit down here. There, see, it got close. It kind of converged, right? And came down. No, there was a brief crossover here. That's really more, well, I would give it more credence, but it died within 1 or 2 candles and then went down. And we just crossed over here yesterday night. That's UTC, by the way, universal time, so more like in European time. And now we're seeing the Kalman, expand. and actually the shorter one, the 20-day, is the 20 candle is above, and that's for positive for now, but it has to continue obviously. So we're keeping an eye on that. That's fairly positive. It's not bad. Let's take a look at Ethereum also on the 120. Okay, looks very similar. Looks very similar. Here the buy level, netline buy level, was at 2030, 19 cents. That's where the buy occurred. It pulled back. In this case, my rule would have been to get in, but then get out right here, and then get back in here. And yeah, so far it's holding up, so it's looking positive. So we have a decent chance that this is working out. It's working its way higher, but as I showed you already on the daily, let me actually show you the daily here on Ethereum as well. 1 day. Yeah. Again, it's a little bit delayed because I'm doing this on a VPS. All right. So here the buy level, I'm gonna zoom in, is at I think 2,458, if I'm not mistaken. Yeah, let me zoom all the way in. Yes, 2,458, I think that's the buy level, and we are quite a ways away from it. It's actually a strong buy level because I remember I painted that way back because I've now fixed that indicator. I've set it to price change as opposed to recent close, and now it's showing the most active one. That's the recent one, and you can see it's like almost double candle. This one is a tiny bit higher, but this one is going to be very important for Ethereum, overcoming this on the daily. So we're quite a ways away. It might take a while. But if we breach that, we're in better shape. Until then, this is just a dead cat bounce. So, I'm still skeptical. So that's that. That's all I got for today. I don't want to make this too long, these daily updates, but I want to keep you guys abreast of what's going on. It's looking more positive on 120, but the daily, we're far away from that one turning, right? The comments haven't turned here yet. And it's probably going to take a while if they turn. They're not as responsive. They shouldn't be, right? Because if they're too responsive, then they kick us out doing trends, and we don't want that. So we want to stay in the game as long as possible on these big moves, and that's exactly what they're really, really good at, it seems. Okay, that's all I got for today. See you guys next time. Oh, by the way, don't forget to subscribe and upvote. Cheers.